What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall markets, what seasonality suggests for the market moving forward, and what's going to likely happen looking at the current trends. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. So, looking at the markets, as you guys could tell, the trend still remains bullish on SPY and the QQQ. We're just getting bought up every time we dip. We did get this big sell-off that happened on Tuesday, right? The market dumped quite a bit. It gapped down very hard. But instead of continuing to fall, we just made a V-shaped recovery and the market's continuing to push for all-time highs. On the QQQ, we had this head and shoulders like setup, which caused a lot of people to start shorting the market very hard when we look at our options chain for both SPY and the QQQ. But instead of continuing to dump, the market just got completely bought back up. Now, when we look at our seasonality data, and I'm using this very, very awesome tool known as Forecast that could help you guys see what tends to happen historically and what this means for the market moving forward. This suggests that there would be some downside for the first week of September. Then by the second week, we start to bounce. We did start off with some downside in September for the first day or two, but then very early on, we're starting to get bought back up right now. So it's still technically in line with what we see historically. There's about a 93% correlation with the current year, the current chart on the S&P 500, what we saw 5 years ago. But the thing about that is that we could still bounce for another week or so. Even like this chart showed that there was a bit of a pullback for the first week. Second week, we start to bounce. Then it isn't until like the third to fourth week of September we start to really sell off. So that is what the seasonality basically suggests, at least thus far. Now, what's very interesting about this is that, the market's just full of trickery and that there's going to be a lot of times when, historical data does suggest that we're entering a phase where we should be a lot more cautious. But these market makers will continue to do their own thing to trick retail. And that's the very, very tricky thing about this market. That's why I believe the most logical thing to do is play the price action in front of you, play the trend in front of you, and you could be making a lot of money either way. You could be playing upside for now, but then eventually transition when the time is finally right. So, will the market get some kind of correction? Well, the answer is honestly that I believe that we will eventually get a bigger pullback, especially because the QQQ has a gap to fill at 565. There's also plenty of gaps to fill below. We will eventually return to fill most of these. Historically, most gaps do get filled eventually. And on SPY, there's a lot of gaps left at the 640s. There's some gaps all the way down in the 620s. There's also one right here at 607 and then 600. So a lot of these gaps will get filled eventually, but we're just not ready yet to do so. So for now, the market's just breaking out to new all-time highs. We're not ready to start filling a lot of those gaps. But then why are we looking at seasonality? Well, the benefit of looking at seasonality is that it gives us a hindsight about what typically happens. What typically happens to the S&P 500 is that we rally from April up until September. Then we start to decline the first week of September, bounce by the second week, and then by the final 2 weeks of September, we tend to sell off. So that's what typically happens, at least when we look at our data. We started off with the sell-off for the first week of September. We did actually sell off quite a bit on SPY and the QQQ, but then we bounced and made a full recovery right after. So even if you look at the QQQ, we went from 582 all the way down to 559. So we did actually dump over 20 points on the QQQ, at least heading into September. But now we're starting to bounce, so we could try to rally again. But I do want to warn you guys to be careful because within the next 2 to 3 weeks, I do think the market could be looking for significant downside again. So that's what our risks essentially tell us. Now, for other tickers like Tesla, there could also be a very, very big opportunity coming. When you zoom out of Tesla, we're forming a nice accumulation right over here, but we're holding this support right over here where this trend line happens to be. So this suggests that Tesla is just bouncing off the trend line, and it could try to rally one more time. So what does this mean and what does seasonality tell us? What typically happens is that Tesla respects an uptrend in May, June, July, August, September, and then October. When October comes, historically, the majority of the time Tesla does sell off in October. That is the most bearish month of the year for Tesla, the month of October. And then we start to rally again as we approach the end of the year. So there might be some really nice buying opportunity. Now, if you are interested in like looking for when you should be buying into Tesla or not, This very useful tool known as Forecaster also will show you our DPO indicator. This will let you know when there's good areas to start buying and start selling. We don't really have much on Tesla right now because right now the overall market mood meter is neutral. So Tesla's more neutral. I wouldn't be buying too heavily or selling too heavily up here. We're just kind of like waiting to see how high it goes. We do typically rally for another like month on Tesla before we start to sell off. That could be when we start to just sell these shares or positions when Tesla forms a peak in the next couple of weeks. And then, there could be another buying opportunity in October. That is one possibility. That is what our seasonality suggests. But fundamentally, the fair value of Tesla based off what analysts are giving us is about $274 a share, which suggests that Tesla might be a little bit overvalued in the eyes of lots of different investors. That could basically solidify the potential for some kind of like buying opportunity if we do get some kind of pullback in October, which is what Tesla tends to do. Also, when it comes to more data, keep in mind that when it comes to our balance sheets, on a quarterly basis, there are a lot of things that kind of decline for Tesla, like their growth, their margins, and such. So that's not the best of pieces of news. There are times where Tesla gets these declines, especially because of their, European sales declining and also because of the American sales. So we're going to see how their earnings goes, at least moving forward. They're known for doing decently, but as of recent, earnings have been a little bit weaker. So it does open the door for more risk on Tesla. Now, long term, everything's still bullish. Even seasonality is very, very bullish on Tesla for the longer term. For the short term, just be careful once we get to that October period. We are known for kind of like selling off in October. That is the risk that Tesla tends to have. You could also see what happens when it comes to our like monthly averages. On average, October tends to be one of the weakest months of the year before we start to rally in November and December. And then for the QQQ, it's the same thing. The correlation is not as strong on the QQQ, but what typically happens is that we sell off the first week of September, rally by the second week. This could suggest that the market may hold up for another week or two. That could also be another way to interpret this. But then by mid-September, that's when we typically get the hardest sell-off, and that is what could be coming soon. So you want to be very careful. Historically, September and October tend to be weaker months, at least for the QQQ. So you want to be very, very careful during this period as we get close to the month of October. Now, we're not necessarily overbought or oversold. We're actually still in a rally. So for now, we're just going to play the price action in front of us. We're still bullish. Tesla could continue to rally for like the 340s. The QQQ and SPY could also continue to break all-time highs, just continue this pump. We're looking quite parabolic, which is why I'm telling you that it's best to just follow the price action in front of us. But there is a risk because we are still forming a triple bearish divergence. I know that this rally has been taking a very long time and they're just continuing to manipulate stocks because of the options chains. So if you look at the options chains, we're just seeing like a lot of a lot of puts that are being bought, which is causing market makers to try to squeeze the shorts as much as they can. And we're continuing to see this again and again and again. So the market's bullish, so we could just follow the trend and we're just looking quite good for now. Once again, our seasonality charts suggest that the market would likely dip the first week of September, then rally the second week before seeing a very, very weak end of September going into October. So that is still very, very possible, and we're still technically on schedule. When we started September, we got a big dump on SPY and the QQQ, but then we just got bought back up immediately, which shows us that the buyers are still in control for now. And if we break all-time highs once again, I'm not really concerned about that. I'm just going to wait and see when we finally pivot. So if you're interested in signing up for Forecaster, like I said before, I have a very, very awesome coupon code. You guys can save 10% on your membership if you want to look at all this data for your trades and such. But one of the best things about Forecaster is that you guys could see what are these politicians doing with their Tesla shares, with their Nvidia shares and such. You could see what insiders are doing, and then you could also look at indicators to tell you when it's smart to buy and sell. Right now, Tesla is kind of like neutral, so I wouldn't be buying or selling too heavily right here. We're just kind of in the middle. But if we get a big rally, there could be moments where it tells us to start selling. So for example, as we rallied into the 400s, we were getting sell signals. Then we saw Tesla dump all the way down towards the 200s. Around the 300 area, that's when we started to get some buy signals, and it continued to dollar cost average all the way down to like the 230s. So this was telling us to buy in the 230s. Since then, we've been rallying. We got some minor sell signals at 350 and then 360. If you had sold at those levels, you could have actually bought back up into 280s before we got that big dump. And since then, Tesla's been consolidating. So this is neutral. If we get another rally in September, which is what Tesla typically does, we could end up getting another sell signal once we get to these highs. And then, if we get another correction in October, that could be when we start to buy up Tesla for an end of the year rally. So ultimately, Tesla is bullish. Just to be very, very frank, Tesla is still very bullish on the longer term time frames. It's just that we typically see a temporary sell off in October, at least based off our historical data and based off what our chart suggests. I think that Tesla is also forming a larger cup and handle right here. So if you draw this out, this resembles a cup and then handle. So even if we rally a little bit in like September, we could still turn back down in October just for a temporary dip buying opportunity. And then that could set us up for a big rally heading into the end of the year, heading into like November/December. We could just start this rally and then continue to break all-time highs like this. That's what our seasonality chart is basically suggesting. So keep that in mind. For now, Tesla is still bullish, but we might sell off just a little bit in the month of October if we end up getting that seasonal move. So we're just going to follow the price action, like I said before, on Tesla, SPY, the QQQ, and the others. And for now, the charts do look more bullish. There's a lot of trickery in the markets. As you could tell, the QQQ formed a head and shoulders, but then we got a big rally right after. Instead of getting a big sell-off, the market makers knew that we would see a lot of sellers, a lot of put buyers, a lot of shorts piling into the markets because of this head and shoulders, which is why they rally us again. And that's why we're seeing the market continuing to break out. Same thing with NQ. It's looking more bullish, forming an inverse head and shoulders right here, trying to go for this high at 23,800 plus. ES as well is looking quite bullish, once again favoring new all-time highs. So yeah, the market could continue to rally. And our seasonality kind of like suggested a temporary sell off the first week, then a rally the second week, which is not that far from what's happening. We did sell off to start off September, then now we're getting a rally. But then once we get to around September 15th, that's when we typically see a major sell off. I'm not saying the market will sell off that hard, but that is what our seasonality charts suggest. So there is a risk of downside as a result. That basically tells me that I'm going to be looking for a catalyst. Maybe it's like, FOMC. That's also going to be around the middle of September, whatever the catalyst is. And could that be what turns the market back down? We'll see what ends up happening. But the best thing to do is just be very open-minded and be very careful as we get into like mid-September. The market is bullish for now. The bulls have a bigger edge. The bulls are winning. So we're going to play the charts in front of us like we're seeing on our different indicators. Once again, we're not getting any major sell signals on the QQQ or SPY looking at our advanced DPO indicators, right? We're not getting major sell signals yet. So we're just going to follow the price action, which suggests that we're going to be going higher. That's what our data is kind of like suggesting for now. Forecasters suggest that we're still going higher, but things can shift later on once we get to mid-September based off seasonality. So be very, very careful during that period. We're just waiting to see what's going to happen, if there's some kind of pivot or not. So that does not mean just YOLO into shorts, jump into shorts and expect the market to crash. What that means is that we're going to follow the price action, follow the charts in front of you. SPY is developing a quadruple bearish divergence. The QQQ is doing the same thing. We also have a bearish divergence on the RSI. The QQQ also has a quadruple bearish divergence on the 4-hour, which suggests that, yes, we could rally higher, but I'd be very, very careful the higher we go. And then as we get closer to the really, really risky periods, such as mid-September, that's when you want to be very, very careful with this, because that's when we've seen a lot of selling on the S&P 500 and the QQQ as we get to like mid-September. So right here, for example, the QQQ historically it kind of like sells off the first week of September, then rallies the second week. We dipped the first week a little bit, but then we just started to rally already. So it's kind of like early, and we could rally a little bit more for a week before we enter the risky phase around mid-September. Is it a coincidence that it aligns very nicely with Jerome Powell's speech in the FOMC meeting on September 17th? Maybe, maybe not, but you want to be very, very careful. Also, as the market rallies, I want to let you guys know that sentiment also greatly affects this market. Right now, our market mood indicators, I think I have it right over here. Market mood is still currently, neutral. It's getting closer to becoming more greedy. So we're entering that like different state. Same thing with the QQQ. The market mood indicators are also looking very similar. We're seeing a lot of greed that's still present in the markets as buyers are stepping in, but The problem is that as people are becoming more and more greedy, people keep on buying and buying and buying and buying up the markets. Well, the problem is when everyone turns too bullish, that is when you want to become very, very careful. And what they're doing is they're playing a long term game. They're just squeezing the market, squeezing the market, turning everyone into perma bulls, thinking that they're going to shift everyone's views. And eventually, when everyone turns bullish, starts to buy in, that's when they're going to give us the rug pull. So you want to be very careful. Never forget that, guys. The market works like that. And we have to be very, very careful during times like these. So, in conclusion, the market has more upside potential. We could continue to rally. There is potential to push more in the stock market for SPY, the QQQ, and Tesla. Tesla is also looking quite bullish. We have earnings coming up very soon, and then deliveries and such, at least for the third quarter later on. But I just want to say that we could continue to rally and rally and rally. Tesla could continue to fly. Yes, it can for another month. The market may rally for another couple of weeks. But as we get to mid to late September, I would warn you to be very careful because now seasonality suggests that the downside risk is higher then. So watch the trend in front of you and play the charts, but be careful. Whatever the catalyst is, whether it's FOMC being a buy the rumor, sell the news event, or whatever pieces of news come out involving President Trump's tariffs, whatever the news is, it could be causing a lot of volatility, at least for the markets. And I think it's very, very smart to have these warnings in place. So if you guys want a very, very good tool to use to understand if it's smart to buy your favorite stocks or start selling them, is it smart to just, look at the trend or not? What is likely going to happen in terms of our trend? What is sentiment looking like? And what does seasonality suggest alongside all this data to see what happens on a daily basis in September, what happens during the weekly time frames, which days are more bearish or bullish. If you want all this data, which I think is very, very useful for day trading or understanding your investment journey, please check out my link down below to sign up for Forecaster. It's a very, very awesome tool. And you guys could save 10% if you guys use my link down below. So please check out my links down below. With that being said, I thank you all so much for listening. Like I said before, we're going to be very, very unbiased with the markets, meaning that we're going to play the trends in front of us. But there is going to be a lot of risk now by mid-September once we finally get ready for that potential top. In my videos, I've been saying the market's bullish, but I have been warning you guys about the potential pullback that's coming. I know it's been delayed a lot because of the manipulation and the option chains, but we have to be very, very ready, right? You don't want to be too complacent. You want to be ready for the trickery that's coming to the markets. So could we rally for now? Yes, we're bullish for now, but things could change once we get to that mid-September period. So you want to be very careful then. We still have bearish divergences on SPY and the QQQ, and then Tesla could rally a bit higher. But historically, as we get to mid-September for our ETFs and our index funds, that's when you want to be very careful. And for Tesla, it's October, which is historically the most bearish month. So you want to be very, very careful during those periods. All right. So keep in mind that even if the market does get some kind of correction, if SPY drops like, 5 to 10%, if Tesla gets a big sell-off, I'm not worried. It's just another buying opportunity, but it's good to just have this in mind to know when you should be like more risk on or risk off. So that's the really, really awesome and beautiful thing about using tools like Forecaster. And once again, check out my link down below if you guys want to sign up. With that being said, I wish you all nothing but the best. Thank you all so much for listening. I'll be back very, very soon with another update. Have a good weekend, guys, and peace out.